Junior analysts aren't paid to have opinions about consolidated statements.
Claire Whitfield had known for 11 days that this meeting would be her last as anyone's intern, though nobody else in the room had any idea what that meant. She sat at the far end of the long walnut table in the Sterling Vance Capital boardroom, a legal pad in front of her covered in numbers that did not match the numbers on the screen, and she said nothing while the men around her decided, without asking, exactly how much she was worth. She had been the one to notice the discrepancy first. A set of transfers routed through 3 shell accounts that did not appear in the quarterly filings, and she had made the mistake, or so they believed, of raising her hand in a meeting and asking why. Marcus Doyle, the chief financial officer, had looked at her the way a man looks at a fly on his dinner plate, mildly annoyed that something so small had interrupted something so important, and told her that junior analysts were not paid to have opinions about consolidated statements. The laughter that followed came easily, the kind of laughter that costs nothing to the people producing it. CEO Aaron Vance had not laughed, but he had not stopped it either, and that omission told Claire everything the room needed her to know about where she stood. She was told, in front of 11 senior executives, that her question reflected a fundamental misunderstanding of how finance worked, and that perhaps an entry-level position was not the right fit for someone who could not read a balance sheet correctly. Nobody asked to see her numbers. Nobody asked where the discrepancy had come from. Claire folded her legal pad closed, thanked them for their time, and left the room exactly the way she had entered it, quiet, unremarkable, and carrying a badge in her bag that none of them had ever bothered to ask about. Before we dive deeper, let us know in the comments where you're watching from. We'd love to hear from you. And don't forget to hit that subscribe button so you never miss any of our upcoming videos. 6 months earlier, Claire Whitfield had been sitting across a metal table in a windowless conference room at the Securities and Exchange Commission's regional office, listening to a supervisor named Rita Alvarez explain what the next year of her life was going to look like. Rita had spent 19 years in the enforcement division and had the flat, unhurried voice of someone who had stopped being surprised by what people did with other people's money a long time ago. She told Claire that Sterling Vance Capital had come across the commission's radar 8 months prior, after an anonymous tip alleged that the firm was concealing losses from a failed real estate fund by routing capital through a chain of shell entities registered in 3 different states. The tip had come from an internal source, someone inside the company, and that source had died in a single-car accident on a wet road outside of Hartford 11 weeks after making contact. Rita did not say the word suspicious. She did not have to. She simply let the fact sit on the table between them and asked Claire whether she still wanted the assignment. Claire had said yes without hesitation, though the hesitation came later, in the weeks after, in the quiet of her apartment when she ran the numbers on what she was walking into. She had a finance degree from a mid-tier state school, 3 years at a regional accounting firm, and a talent for reading spreadsheets the way other people read faces, noticing the places where a number had been asked to say something it did not naturally mean. That talent had gotten her recruited into the Commission's Undercover placement program 2 years earlier, a small, quiet unit that embedded trained forensic accountants inside companies under investigation, posing as ordinary employees, gathering the kind of evidence that subpoenas alone could never reach. She had done one prior placement, a mid-sized logistics company in Ohio that turned out to be laundering money through inflated shipping invoices, and it had ended cleanly, with indictments and no one getting hurt. Sterling Vance Capital would not be clean. She understood that from the beginning, and she took the job anyway. Her cover was built with the same patience the commission built everything with. A resume constructed over 8 weeks, references who would answer the phone and say exactly what needed to be said. A work history that placed her at 2 firms that had genuinely existed and genuinely employed people who genuinely remembered nothing unusual about her. She interviewed for the junior analyst position at Sterling Vance in February, competing against 11 other candidates for a job that paid $48,000 a year to review invoices, reconcile ledgers, and stay quiet in meetings. She got the job not because anyone recognized anything remarkable in her, but because she had made herself unremarkable on purpose, competent enough to be useful, unthreatening enough to be ignored. She had learned in her first placement that the second kind of invisibility was the more valuable one. People do not lie carefully in front of someone they have already decided does not matter. The first month at Sterling Vance taught her more about the company's culture than its books. She watched the way the executive floor treated the people who kept the building running around them, the way Denise Acaffer, the head of internal compliance, was spoken over in meetings by men who had been at the firm 2 years less than she had, the way the cleaning staff who came through in the evenings were treated as furniture that occasionally needed avoiding. She watched Preston Cole, a senior analyst with slicked hair and the confidence of someone who had never once had a decision he made questioned by a superior, take credit in a meeting for a cost-saving proposal that a junior colleague named Alicia Ramos had actually written, and she watched Alicia say nothing because saying something would have cost her more than staying silent did. None of this was the fraud Claire had been sent to find, but she wrote it down anyway, in the notebook she kept in a locked drawer at her apartment, because patterns like that told her something true about how a room like this one made its decisions, and who it decided did not need to be listened to. The financial pattern took longer to surface, the way these things always did. Claire's official duties gave her access to accounts payable and a narrow slice of the general ledger, nowhere near enough to see the whole picture, so she built the picture the slow way, the way her training had taught her, one small inconsistency reconciled against another until a shape began to emerge from the noise. A vendor named Halloway Structural Consulting billed the company for engineering services on 3 projects that, according to the public permitting records Claire pulled on her lunch break using a library computer 2 towns away from her apartment, did not exist. A second vendor, Ridgeline Data Partners, invoiced monthly for services that were never described in enough detail to audit, and the invoices were always approved by the same signature, always processed within 48 hours, always just under the threshold that would have triggered a secondary review. She began keeping 2 versions of her notes, one for the job she was pretending to do, and one, kept off any company device, for the job she actually had. By April, Claire had enough to understand the outline, even without the detail that would make it prosecutable. Sterling Vance Capital had raised money from investors for a real estate development fund 3 years earlier, promising returns based on a set of properties that had, in the time since, either failed to develop or been sold at a loss the company never disclosed. Rather than report those losses, someone inside the firm had begun routing money through Halloway and Ridgeline, and at least one other entity Claire had not yet fully traced, dressing up the fund's performance for the quarterly reports that went out to investors, some of whom were pension funds, some of whom were retirees who had put a piece of their savings into Sterling Vance, because Aaron Vance had a reputation, cultivated over 15 years, as a man who did not lose his investors' money. The reputation, Claire had come to understand, was the product being sold. The fund's actual performance was almost beside the point, as long as the reports could be made to say what the reputation required. It was in May that Claire first crossed paths, professionally, with the man who would become the center of the case. Marcus Doyle had joined Sterling Vance as chief financial officer 4 years earlier, recruited from a larger investment bank where, Claire would later learn, he had left under circumstances nobody at Sterling Vance had bothered to investigate closely, because his references had been glowing, and his numbers on paper had always looked clean. Doyle ran the finance division with the specific kind of control that comes from a man who understands that most people do not read footnotes, and he had built, over 4 years, a system of approvals and sign-offs that routed nearly everything of consequence through his own desk before it went anywhere else. Claire's early interactions with him were unremarkable. A signature requested here, a clarification requested there, nothing that suggested he had noticed her at all. That would change. The first real crack in Claire's cover appeared in June, when Preston Cole, irritated that a junior analyst kept asking for backup documentation on invoices he considered settled, began asking questions of his own. He was not suspicious of what Claire actually was. The idea that a junior hire could be anything other than what her resume said would not have occurred to a man like Preston, whose imagination did not extend downward. But he was territorial, and he did not like being asked to justify a process he had signed off on without reading, so he went to Doyle and mentioned, in the offhand way men like Preston mention things they want someone else to handle for them, that the new analyst in accounts payable seemed to be spending an unusual amount of time on the Holloway and Ridgeline files. Doyle did not react visibly. He thanked Preston, told him it was probably nothing, and asked, almost as an afterthought, what Claire's start date had been. Preston did not know. Doyle looked it up himself that afternoon. Claire did not know in the moment that she had been noticed. She learned it 3 days later. In the small, deliberate way, these things surface inside companies that are used to managing problems quietly. Her manager, a mid-level accounting director named Frank Nash, who had always treated her with a distracted kind of courtesy, called her into his office and told her, without much explanation, that her file access was being restricted while the department underwent a routine systems audit, and that in the meantime she should focus on a set of lower priority reconciliation tasks that had nothing to do with vendor invoices. Frank did not seem to fully understand why he had been asked to say this. Claire understood exactly why. She thanked him, went back to her desk, and spent the rest of the day doing precisely the lower priority work she had been assigned, giving the appearance of a young employee who had accepted a minor inconvenience without complaint, while she quietly began transferring what she had already gathered to a drive that never touched the company network. It was in this period that Claire found her first ally, though she had not been looking for one, and would spend weeks afterward second-guessing whether she should have let it happen at all. Todd Reyes worked in the building's IT support office on the 3rd floor, a soft-spoken man in his early 30s who had been at Sterling Vance for 6 years, and had, in that time, developed an unusually precise understanding of exactly which systems the company monitored closely, and which it had never bothered to update since the office moved into the building. Claire had come to him in April with a routine laptop issue, and in the months since, a small, easy friendliness had grown up between them, the kind that exists between two people who are each, for their own reasons, quietly overlooked by everyone above them. Todd did not know what Claire was doing. He knew only that she was kind to him in a building that mostly was not, that she asked about his daughter's school recital and remembered the answer, and that when her file access was suddenly restricted, she came to him with a technical question that he answered without asking why she needed to know it. The compliance officer's confrontation with Doyle happened in the last week of June, and Claire only learned the details of it after the fact, pieced together from a conversation she was not supposed to overhear, and a set of internal emails she found later, once the case had moved into a different phase entirely. Denise Acaffer had been compiling her own concerns about the Holloway and Ridgeline vendor relationships for nearly a year, working quietly and without support, the way compliance officers at firms like Sterling Vance often did, treated as an obstacle to be managed rather than a function to be respected. She brought her findings to Doyle directly, in a private meeting that lasted 11 minutes, and told him she intended to escalate the matter to the board's audit committee unless she received a satisfactory explanation. Doyle listened, thanked her for her diligence, and 3 weeks later, Denise Acaffer was informed that her position was being eliminated as part of a departmental restructuring, effective immediately, with a severance package contingent on a standard non-disparagement agreement. Claire heard about Denise's departure the way everyone in the building heard about it, through a brief, bloodless internal announcement that thanked her for her years of service and wished her well in her future endeavors. She understood immediately what had actually happened, though she could prove nothing yet, and the understanding sat with her for days in a way that the earlier discoveries had not. It was one thing to trace a pattern of shell invoices through a general ledger. It was another to watch a woman who had done exactly what she was supposed to do, who had raised a legitimate concern through exactly the correct internal channel, be quietly removed from the building for the crime of being right too early. Claire began, from that point forward, keeping a separate file specifically for the human cost of the fraud, not because the Commission's case required it, but because she had decided, somewhere in the weeks since Denise's departure, that this part of the story mattered too, and that whoever eventually had to answer for what happened at Sterling Vance would answer for all of it, not just the parts that showed up in a spreadsheet. By August, Claire's evidence had grown into something close to a complete picture, though she still lacked the one thing every case like this eventually needs: a direct link connecting Aaron Vance himself to the concealment, rather than to Doyle acting alone or with Preston's incurious cooperation. She had watched Vance closely in the months since her arrival, in the all-staff meetings where he spoke about the firm's culture of integrity with the smooth, unbothered confidence of a man who had said the same words so many times he no longer heard them. And in the smaller moments, the way he walked past the mailroom without acknowledgement, the way he had once stepped over a spilled coffee cup in the break room rather than mention it to anyone, leaving it for someone else to notice and clean. She did not yet have proof that he knew about Holloway and Ridgeline specifically. She had a growing certainty, built from 100 small observations, that a man who ran his company this way was not a man who would have failed to ask questions about where 4 years of unexplained vendor payments were actually going. The break came in September, and it came, as these things often do, from a source Claire had not anticipated. Lydia Marsh, a member of Sterling Vance's board of directors who had spent most of her 3-year tenure quietly deferring to Vance's judgment on matters she did not fully understand, had begun asking her own questions after a routine board packet included a footnote about the real estate fund's performance that did not match a conversation she remembered having with Vance 18 months earlier. Lydia was not an accountant. She had built her career in commercial real estate development, and something about the footnote's phrasing, deliberately vague in a way that experienced developers learned to notice, sat wrong with her for weeks before she finally acted on it. She did not go to Doyle. She went, quietly and without telling anyone at the firm, to an outside attorney she trusted, who happened to know, through channels that existed for exactly this purpose, how to reach the right people at the commission without setting off alarms inside Sterling Vance itself. Rita Alvarez called Claire into the regional office on a Tuesday morning in late September and told her that a board member had come forward, independently and without knowledge of the ongoing investigation, with concerns that aligned almost perfectly with what Claire had already documented. This was, Rita explained, the kind of convergence that made cases. An internal embedded investigator with 8 months of granular financial documentation, and an external board member willing to testify to a specific conversation with the CEO that contradicted the public record. Between the two of them, the commission now had what it needed to bring the matter to the Department of Justice for a parallel criminal referral, given the scale of the losses and the apparent effort to conceal them from investors, some of whom were pension funds managing the retirement savings of people who had never heard of Sterling Vance Capital and never would, unless the fund collapsed and took a piece of their future down with it. Rita told Claire the operation was entering its final phase, and that the timeline for action was now measured in weeks rather than months. It was in this final stretch, with the case nearly complete and the pressure at its highest, that the boardroom meeting happened, The one where Marcus Doyle looked at Claire's raised hand and decided, with the casual cruelty of a man who had never once considered that the room might remember how he behaved in it, to make an example of her in front of 11 senior executives. Claire had not planned to raise her hand that day. She had noticed, reviewing a summary document prepared for the meeting, a transfer that did not reconcile with the version of events Doyle had presented to the board 3 weeks earlier, and some instinct, some fatigue after 8 months of careful silence, had made her ask the question out loud instead of writing it down for later. She understood, the moment the laughter started, that she had made a small tactical error. She understood something else too, watching Vance's face as he let the laughter continue, watching Preston Cole enjoy himself more than the moment warranted, watching every executive in that room decide, without a shred of curiosity, that she did not deserve an answer. She understood that this was not an isolated incident. It was, exactly as the pattern she had been documenting for 8 months suggested, simply how this room worked when it believed no consequence was coming. She left the boardroom that afternoon and went directly to a payphone 3 blocks from the building, a habit she had maintained throughout the assignment despite how anachronistic it felt, because payphones left no digital trail back to her. She called Rita Alvarez and told her what had happened, not because the humiliation itself was evidence of anything prosecutable, but because it had clarified something for her about the timeline. She no longer believed Sterling Vance Capital deserved the courtesy of a slow, careful wind down. Rita listened, and then she told Claire something that changed the shape of the final 2 weeks entirely. The Department of Justice had, that same morning, finished securing a sealed indictment against Aaron Vance and Marcus Doyle on charges of securities fraud, wire fraud, and conspiracy to defraud investors, and a coordinated action involving the FBI and the Commission's own enforcement division was being scheduled for the following week. Claire's assignment, Rita said, was almost over. What remained was making sure she was not caught in the building when the action finally happened, and making sure the evidence she had gathered over 8 months made it into the hands that needed it before anyone at Sterling Vance had a chance to notice the ground shifting beneath them. The week that followed was the hardest of Claire's assignment, harder than any of the 8 months that preceded it, because it required her to sit in the same building, attend the same meetings, and maintain the same quiet, unremarkable posture, all while knowing that the walls around her were about to come down. She watched Preston Cole take credit for another junior colleague's work in a Tuesday meeting and said nothing, the way she always said nothing, though it cost her more now than it had in April. She passed Denise Acaffer's old office, still empty, still bearing a nameplate no one had bothered to remove, and thought about the 11-minute conversation that had ended a woman's career for the crime of asking the right question a year too early. She saw Lydia Marsh in the hallway once, and the 2 women exchanged a glance that lasted perhaps 2 seconds, neither of them acknowledging what the other one knew, both of them understanding, in that brief silent exchange, that they were standing on the same side of something neither of them had chosen but both of them now carried. Todd Ray's noticed in that final week that Claire seemed different, quieter than her usual quiet, and he asked her once in the break room whether everything was all right. Claire told him she was fine, that she was just tired, and Todd, who had never pushed at anything in his life that was not his to push at, let it go. She thought, watching him walk away, about what she had learned over 8 months regarding who in this building deserved to come out the other side of what was coming intact, and Todd Ray's belonged, without question, on that short list. He had never asked her a question he was not owed the answer to. He had never once made her feel, in a building built almost entirely out of people who did, that her presence required an explanation. She made a note of this, the way she had made a note of Denise Acaffer's confrontation and Lydia Marsh's quiet doubt, because she had decided, somewhere in the accumulating weight of the last 8 months, that the final accounting would include more than the numbers. The Thursday morning the action happened began, for most of Sterling Vance Capital's employees, exactly like any other. Claire arrived at 7:45, badge in hand, coffee in the other, and took the elevator to her floor the way she had nearly 200 times before. She had been told the timing would be precise, coordinated between the FBI's field office and the Commission's enforcement team, designed to secure the building's financial records before anyone inside had a chance to alter or destroy them, and designed, though no one said this part out loud, to happen in a way that made clear to every employee in the building exactly what kind of company they had been working for. Claire did not know the exact minute it would begin. She knew only that when it did, her job was to remain exactly where she was, doing exactly what she always did, until the moment her actual role in the building became visible to everyone at once, the way a photograph develops, slowly and then all at once. At 9:12 that morning, the elevators on the ground floor opened, and 6 agents in windbreakers marked with the Bureau's insignia crossed the lobby with the unhurried, procedural pace of people executing a plan they had rehearsed many times before. 2 more came through the loading dock. A team from the Commission's Enforcement Division arrived 12 minutes later, carrying the paperwork that would secure the firm's servers and financial records before end of business. Marcus Doyle, in his office on the 14th floor, looked up from his monitor when his assistant told him, in a voice that had already started to shake, that there were federal agents asking for him by name at the front desk. Aaron Vance was in a meeting on the executive floor when his general counsel interrupted without knocking, something that had never once happened in the 4 years the counsel had held the position, and said only that Vance needed to come with him immediately. Claire was at her desk on the 7th floor when the building's normal ambient noise began to change, the way it does when something moves through a large space that was not supposed to be there, footsteps that carried a different weight than the footsteps everyone was used to, voices pitched lower and more deliberate than the ordinary conversational hum of a Thursday morning. She did not go to the window. She did not need to. She simply closed the file she had been pretending to work on, and waited, the same way she had waited through 8 months of careful, patient silence, for the moment that was now, finally, arriving. Preston Cole was the first person on Claire's floor to understand that something had gone badly wrong, and he understood it the way men like Preston Cole always understand these things, several steps behind the reality and still convinced, even as the evidence assembled itself in front of him, that whatever was happening could not possibly touch him personally. He watched 2 agents step off the elevator and ask a floor receptionist for directions to the accounts payable department, and his first thought, he would admit much later to an internal investigator, was that this must be some kind of external audit gone unusually formal. It was only when one of the agents, a woman named Special Agent Renata Boyd, walked directly to Claire's desk, addressed her by a name Preston did not immediately register as unfamiliar, and asked whether she was ready, that Preston understood the ground beneath his entire understanding of the last 8 months had never been solid at all. Claire stood up from her desk, the same desk she had sat at nearly 200 times, doing the same unremarkable work she had done to build the same unremarkable reputation, and said that she was ready. Special Agent Boyd nodded, and the 2 of them walked together toward the elevator bank, past desks where employees had stopped typing, stopped talking, stopped pretending to work, and were simply watching, the way people watch something they will spend the rest of the week trying to explain to someone who was not there. Preston Cole stood frozen at his own desk, his mouth slightly open, running through 8 months of small interactions in his head at a speed that could not possibly keep pace with what he was now trying to understand. He had mocked her legal pad in a meeting 3 weeks earlier. He had taken credit for Alicia Ramos's work in front of her without a flicker of concern that anyone in the room might remember it later. He understood, watching Claire walk toward the elevator with a federal agent at her side, that someone had, in fact, remembered. The gathering in the lobby, by the time Claire and Special Agent Boyd reached the ground floor, had grown to include most of the building's morning shift, drawn by the particular gravity that forms around a crisis nobody yet understands the shape of. Aaron Vance stood near the reception desk, flanked by his general counsel and a second agent, his face carrying the specific, controlled stillness of a man trying to project calm to a room he no longer controlled. Marcus Doyle stood several feet away, closer to the elevator he had come down in, his hands visible at his sides in the deliberate way people hold their hands when someone has recently explained to them why visibility matters. Lydia Marsh had arrived separately, summoned by her own attorney once the timeline accelerated, and she stood near the edge of the gathering, watching the scene with the particular expression of a person who had spent 3 years deferring to a man's judgment, and was only now beginning to understand the full weight of what that deference had cost. Claire crossed the lobby floor toward the small cluster of executives and agents, and the room, without anyone directing it to, went quiet in the specific way rooms go quiet when they sense that the next 30 seconds will explain everything the last several months failed to. Marcus Doyle looked at her first, and something in his expression shifted through several stages in rapid succession: confusion, recognition, and finally something closer to comprehension. The look of a man doing 8 months of arithmetic in the space of 2 seconds, and arriving, finally, at the correct sum. He did not say anything. There was nothing left for him to say that would change what Special Agent Boyd was already reading from the documentation in her folder. Aaron Vance, for his part, looked at Claire the way he had looked at her exactly once before, across the boardroom table 3 weeks earlier, except this time the expression carried none of the careless dismissal it had carried then. He was looking, for the first time since she had walked into his company 8 months earlier, directly at her, and seeing, for the first time, exactly who had been sitting at the end of his table the entire time. Special Agent Boyd read the charges aloud in the specific, procedural voice that federal agents use for exactly this purpose: unhurried, unembellished, designed to be understood rather than performed. Aaron Vance and Marcus Doyle were being taken into custody on charges of securities fraud, wire fraud, and conspiracy to defraud investors, in connection with a scheme to conceal significant losses in the company's real estate development fund through a series of shell vendor relationships spanning nearly 4 years. The room absorbed this the way rooms absorb information too large to process in real time, in fragments, a few people covering their mouths, a few reaching for their phones before remembering that this was not the kind of moment that photographed well, most simply standing very still, trying to reconcile the version of Sterling Vance Capital they had believed they worked for with the one now being described in flat, procedural language by a federal agent in the middle of their lobby. It was Aaron Vance who finally spoke, though what came out of him was not a defense, not yet, but a single question directed at Claire, asked in a voice that had lost every trace of the smooth, unbothered confidence Claire had watched him deploy in 100 meetings over the last 8 months. He asked her how long. Not an accusation, not yet, simply a question from a man trying to locate the exact moment his understanding of his own company had stopped being accurate. Claire told him the truth because there was no longer any reason not to. 8 months, since February. Since before the first quarterly report he had signed that year. Since before Denise, Okafor raised her concerns and lost her job for it. Since before Lydia Marsh noticed a footnote that did not match her memory of a conversation. Since before a boardroom full of executives had laughed at a question she had asked because she had, for a moment, forgotten to stay as invisible as her assignment required. Vance absorbed this in silence, and something in his posture, some final structural piece of the confidence he had built over 15 years, gave way entirely. Special Agent Boyd and her team led Vance and Doyle out through the front entrance, past the same glass doors Claire had walked through on her first day 8 months earlier, and the lobby, once they were gone, did not immediately return to normal. It sat instead in the particular silence that follows an event too large for the space it happened in, employees standing in small clusters, speaking in low voices, some already pulling out phones to call people who would not believe what they were about to be told. Preston Cole stood near the elevator bank, still processing, still running the arithmetic that would not resolve in his favor no matter how many times he ran it. Lydia Marsh approached Claire directly, once the agents had gone, and thanked her quietly for something Claire understood the board member could not yet fully articulate: gratitude and guilt arriving in the same sentence, for very different reasons. The internal reckoning at Sterling Vance Capital, in the days and weeks that followed the arrests, unfolded with a precision that mirrored the fraud it was addressing, methodical, documented, and ultimately proportional to what each person had actually done. Preston Cole was placed on administrative leave pending an internal review into whether his role in dismissing Claire's early questions and his broader pattern of taking credit for subordinates' work constituted a violation of the firm's code of conduct sufficient for termination. The review found that while Preston had not participated in the fraud itself, his conduct toward junior colleagues, including the incident in the boardroom, reflected a pattern serious enough to warrant demotion and mandatory retraining, a consequence that fell short of the ending some employees felt he deserved, but one that matched, with a fairness Claire had come to respect about how these things were eventually sorted, the actual scope of what he had done. Alicia Ramos, whose work Preston had claimed as his own, was promoted into the role he vacated. Lydia Marsh, whose independent doubts had converged so critically with Claire's own documentation, cooperated fully with the ongoing federal investigation, providing testimony about the footnote discrepancy and the conversation with Vance that had first raised her concerns. She was not implicated in the fraud itself, having had no knowledge of the shell vendor scheme, but the board's internal review noted, in language Lydia read many times afterward, that her years of quiet deference to Vance's judgment on matters she did not fully understand had allowed a pattern of concealment to continue longer than it otherwise might have. She did not fight the characterization. She resigned from the board voluntarily, 3 weeks after the arrests, and began, in the months that followed, speaking publicly, in a small but growing capacity, about the specific responsibility board members carry to ask uncomfortable questions especially when, doing so risks disrupting a relationship built on trust that has not actually been earned. Denise Acaffer, whose termination the previous summer had initially seemed like a quiet, unremarkable casualty of corporate restructuring, was contacted directly by the Commission's Enforcement Division once the case became public, and her original compliance concerns, the 11-minute conversation with Doyle that had cost her a career she had built over a decade, became a central piece of evidence in establishing that the firm's leadership had been warned about the exact scheme they were later charged with concealing. Denise was offered, and accepted, a position with the Commission itself, in a newly created advisory role designed to help other internal compliance officers recognize and document exactly the kind of retaliation she had experienced. She would say later, in the one interview she agreed to give, that the job had never really been about the money or the vindication, though both mattered, but about making sure the next Denise Acaffer at the next firm like Sterling Vance had a clearer, faster path to being believed. Todd Ray's received no public recognition, because the nature of what he had done, small acts of ordinary kindness toward a colleague he had no way of knowing was working undercover, did not fit into the formal architecture of testimony and consequence that structured everything else in the case's aftermath. Claire made sure, through a private conversation with Rita Alvarez, that Todd's name appeared in the Commission's internal file as an individual whose conduct throughout the investigation, however unwittingly, had been consistently decent, and that this notation would exist, quietly, permanently, in case it was ever needed. She visited him once, several weeks after the arrests, no longer disguising who she actually was, and told him the truth about the job she had been doing in his building for 8 months. Todd listened without much visible surprise, The way a man listens who has spent his whole career being the kind of person other people confide in without quite knowing why, and told her that he was glad, at least, that the kindness had been real, even if the rest of it had not been what it appeared. Claire's own return to visibility happened gradually. In the specific, unglamorous way these things happen when the work itself is the point rather than the recognition. She testified over the following months before a federal grand jury and later at the trial itself, laying out 8 months of documented financial reconciliation in the same patient, unremarkable manner she had used to gather it, one small inconsistency at a time, until the shape of the fraud stood undeniable in front of a jury that ultimately convicted both Vance and Doyle on all charges. She did not seek out press attention, and largely avoided it, though one financial journalist did eventually piece together enough of the story to publish an account of the Undercover placement program that had put a 27-year-old junior analyst inside a company for the better part of a year, an account Claire read once, quietly, and never mentioned to anyone. The question Claire found herself returning to in the months after the case concluded was not really about Aaron Vance or Marcus Doyle, whose choices had always been, in some fundamental sense, simple to understand, greed dressed in the specific vocabulary of financial sophistication. The question that stayed with her longer was about the room itself, the boardroom where 11 executives had laughed at a young woman's question, without a single one of them pausing to ask whether the question might be worth answering. She thought about how easily that room had decided, in the space of about 4 seconds, that she did not matter enough to be taken seriously, and how completely wrong that decision had turned out to be, not because she had some hidden authority that made her important, but because the room's own carelessness about who deserved to be heard was, in the end, the exact vulnerability that brought the whole structure down. It was never really about her. It was about a company that had built itself around the assumption that some voices could be dismissed without consequence, and had never once considered what might be sitting quietly inside one of the voices it dismissed. Sterling Vance Capital did not survive as an independent entity. Its assets were acquired within the year by a larger, more heavily regulated firm, and the properties and investors affected by the original fund's concealed losses received a partial recovery through a settlement negotiated as part of the criminal proceedings, though Claire understood, from conversations with Rita Alvarez in the case's final weeks, that partial recovery was rarely the same thing as being made whole, and that some of the pension funds and retirees who had trusted Aaron Vance's 15-year reputation would carry the cost of that trust for years after the headlines faded. She thought about this often, more than she thought about the satisfaction of watching Vance and Doyle let out through the same glass doors she had walked through on her first day. The people who were never in the boardroom, who never got to ask a question in front of 11 executives, who simply trusted a name on a quarterly statement because trusting it was easier than auditing it themselves, were the ones the entire case had actually been about, even though none of them ever appeared in the lobby that Thursday morning. Claire returned to the Commission's regional office the following month, back to the small unit that placed trained investigators inside companies willing to hide exactly what she had spent 8 months uncovering, and she began, almost immediately, preparing for the next assignment. A different company, a different city, a different set of unremarkable interviews to survive before the real work could begin. She did not think of what she had done at Sterling Vance Capital as a victory, exactly. She thought of it as an accounting in the truest sense of the word, a patient, careful reconciliation between what a company claimed to be and what it actually was, conducted in the same unglamorous, unremarkable way every real accounting is conducted, one small inconsistency at a time, until the truth, inevitably, if you are patient enough to wait for it, refuses to stay hidden any longer. If this story stayed with you, let us know your thoughts in the comments below, give this video a like, and subscribe so you never miss the next one.